Whoa, good day, guys. Good day. First of all, I would like to congratulate you for making it this far. If you made it through this part of the course, it means that you have passed all the basics. You now understand the basic concepts of the Forex market. Now, the basic course was not actually designed to make you profitable, but it was designed to make you understand and navigate the Forex market. This is where the juice is, guys. This is where you learn how to actually become consistent and how to become profitable in the Forex market. So I'm basically going to give you a quick summary of what you guys are going to be going through. It's not a lot. Some of the things you already know. It's just a few things that you don't know that I'm going to teach you, which are the most important things, basically to identify entries, to identify changes in character or changes in trends. So these are the most basic things that I want you guys to pay attention to and practice the most. And basically, yeah, go to the demo, go kill everything. So in this course, we're going to deal with order blocks, we're going to deal with change of characters, we're going to deal with what else are we going to deal with? New things, order blocks, change of character. Okay, I don't remember everything right now, but yeah, regardless of which, you're going to learn a lot. You're going to learn risk management. First of all, risk management, when I taught you on the basics, it was just it was sort of like a summary to make you understand the risk to reward ratio concept of risk management. But now we're going to go into deep detail how to actually calculate risk management, how to actually go about implementing a risk management strategy that's going to help you become consistent in the long run. We're actually going to be discussing also a growth plan, how you actually grow as a trader in the market. So those are just a few things that we're going to be talking about in this course. So yeah, guys, enjoy, pay attention. Remember, implement. Whatever it is that you learn, do not run to your real account. Go to your demo, implement, because the only thing that is going to make you profitable is experience. And you don't need to have much experience. You just need a single month of everyday chart exploring to become consistent. So yeah, guys, with the knowledge that you have, I hope this course is going to make you as profitable as I am. So yeah, guys, have a great time. Enjoy. Let's jump on to your first lesson. Okay, cool. Let's start with order blocks, guys. What is an order block? Basically, an order block is basically an area of supply and demand. So what we do is we identify something called an order block, just to refine our entry, so that we can have those perfect entries, those sniper entries that we like with controlled risk. You understand? If you just take on a zone, like for instance, if price returns to an area of structure or an area of supply and demand, and it's just a zone, you are actually not sure where to place your stop losses and your entries and stuff like that. So you end up with a skewed up risk to reward ratio. So order blocks, basically, all an order block is basically like a specific area in the supply and demand zone. You understand? So if price is now at supply or at demand zone, we basically refine our entries and look for these type of order blocks to actually identify perfect entries in the market. So what actually how actually does an order block look like, or how will you be able to identify an order block when you see it in the market? Okay, cool. What happens is there's a trend, right? Trend goes down, impulse, correction, impulse, as always. So it's a downtrend, and then all of a sudden there's this last down candle, bearish candle moving to the downside. After it closes, a new candle opens, impulses to the upside, breaks previous high. You understand? Now this area here is now identified as an order block. This area here, this was smart money moving price, leaving an area where it's going to come back. So the banks and all these financial institutions, they leave these areas so that they can come back and take orders in this level. So once they push price to the upside, price is eventually going to exhaust and come back to these levels, and then this is where you can start taking your orders. So your entries, you wait for price to come in these zones here, and then you take your orders. So this is a bullish order block. So if price is now impulsing to the upside, it's showing the direction it wants to go. So it wants to go to the upside, we wait for it to come back, and that's a bullish entry. If it's a bearish entry, on the other hand, it will be the same concept, but now it's going to be in an opposite direction. So if price impulses down to the downside, if the trend was moving to the upside, then all of a sudden there's a last up candle moving to the upside, and then a strong impulsive candle to the downside. It's basically showing us that now price wants to move to the downside. You understand? So it's basically an inverse of this. Now, if you're looking at this other side, there's an area that I also draw, because now order blocks can not only be identified by one candle. Yes, they can create one candle that has an imbalance, which will come back to be mitigated. But sometimes it can be a continuing trend down, same concept, last down candle, and then now this candle here does not impulse all the way up to the previous high. It's just a small candle accompanied by other candles, or a smaller yana trend going to the upside, which is eventually going to break this level. Now this here is your last down candle, so you will identify this as an order block, because after this last down candle, the structure went up and broke previous high. So now we know that this was the last down candle here. You understand? So you wait for price to come back to this level, and then you will enter your buys. You understand? I don't know what I just did there. Okay, never mind. Or sometimes something like this can happen, and then there's another down candle in the middle of nowhere. Another down candle forms, that's a bearish candle. These are bullish, and then all of a sudden you see price forming a bearish candle there. So now, which one is an order block? Which one is a valid order block? Both these areas are valid order blocks. You understand? This is how you mark an order block. It's either you mark it from the wick to wick, or body to body, depending on the size of the candle or the way you want to mark that candle off. But at the end of the day, this whole candlestick is an order block. So now both of these candles are valid order blocks. This is where you have to choose the best one for you. Sometimes prices can come back to this zone here and then shoot up, or price can come down to this level and shoot up. So it's your choice now. It's either you take an entry and put your stop loss here, or you take an entry, put your stop loss here, re-enter in this level if price stops you out. Re-enter in this level and put your stop loss down in that level. So this is basically the basic concept of an order block. So now what I want to do, I want to go on a chart and make some examples on the chart, just to see, just to show you basically how an order block would look like in a chart. Cool, let's jump straight into the chart. Okay, cool. Let's quickly go to the chart to see basically the basic idea of an order block. So what is an order block? Like I told you, anything that breaks structure. So looking at this chart here, let's first mark off our areas here. Okay, wait a minute. Right here, I want to mark off our levels of structure here. So as you can see in this level here, you can see that there's a structure here, you understand, which is it's a pivot point which has been broken by this candle. This more lanyana, because this red candle closed below this level here, that now makes this order block here. I don't know if I can zoom it out, if you see it properly. When I zoom it, yeah, much better. So if we take our box and basically mark off that area, let's take the box, the rectangle, and mark off that last bullish candle. There we go. That is an example of an order block. You understand? So what happened here? There was a bullish candle, and then there was a strong impulsive bearish candle that broke. That's an example of a candle of an order block that was created with one candlestick. You understand? So what did price do after that? Price eventually came back to this area, retested this area, as you can see with this wick here. It retested, then went straight down. That's an example of an order block. Price could have easily went up to here. You understand? Price could have went up to this level, because if it dropped down to the lower time frame, you'll notice that these areas also have some breaks, but this was the strongest order block in this case. So price just tested that order block and moved down. So let's move down again to see if what I'm talking about is legit. Is this thing happening consistently on the chart, or am I just making my own assumption? Okay, right now this is a break of structure. You understand? This is, I'm trying to mark off this low pivot point here. Good. This now is another level of structure or pivot point where price came to break. And which order block broke? This was an order block. Let's see. Right here, we will consider that as a valid order block at the given time. Let's just click on it and pull it right there. You understand? That's another order block, but in this case, price did not go to that order block. It just chose to respect structure. You understand? So it continues again, impulse, corrected, and then continued with another small impulse, and, or let's not say a small impulse, let's say a big impulse to this level. And we go back to that pivot area again, to that small pivot area, to see if do we have an order block there as well. Let's just click here. And yep, right there we have an order block. As you can see, this is an order block. Let me just move this thing here so that you can see the order block. 1 second. Good. Okay, as you can see here, this is the order block, the last bullish candle before price pushed down. Guess what happened again? Price went back to that order block and it touched it before moving to the downside. You understand? So that's a basic concept of order blocks. This is how they work. If I could make another example just so you can see that no, these methods actually do work. And now I want to show a different example because this is a pivot point. Okay, it's basically the same thing, but in this case it didn't work as expected. But like order blocks, we must pick and choose. So this pivot point, price broke structure, left an order block. It left an order block which was supposed to be mitigated, and it was on structure. And guess what happened? Price left that area, came back to retest that order block, was not strong enough to push it down. But in this case, it pushes up and breaks this order block here. Oh wait, is that an order block? Let me just double check. Wait a minute. In theory, yes, we could say it is an order block. Yeah, let's assume it's an order block because it will happen sometimes where you mark off an order block and then it doesn't work. But you should keep in mind that if this other order block is not working, we use another one. So how do you know if it's gonna work or not gonna work? You're not going to know. You are just going to place your entry based on the one that you trust the most, based on your analysis. You understand? I'm glad this type of example showed up. So yeah, you actually pick this order block. This order block does not work. We get stopped out in this one, but because maybe we have two entries, we are stopped out of this one. We re-enter here. Price moves in our direction, and we make back the money that we lost. So this will happen every time in the chart. So now, yeah, if you are looking at this corner here, so how would you be trading now? If you're looking at this area here, this corner here, how would we be trading that, given what I just told you? Give you a couple of seconds to think about it, or you can just watch me as I mark off these areas. I'm just gonna go silent just so you have time to think. Okay, cool. Let me just talk about it just to avoid making this video long. So this is another order block that we can see, something similar to that one. It's another order block, but it doesn't work as well. You understand? Now where's price? Price is now on this area here. Price is right in this area. Oh my goodness, I hate it when I can't drag this thing. So price is right at this area now. What do we have here? Here we have an order block. So now because we have an order block here, we have an order block here as well. This one was violated. How do you know if this one is going to work? Well, we're going to go for this one because there's a level of structure here. We're going to talk about structure on the other lesson, but because there's that level of structure and it also has a confluence of that order block, we'll take that order block. If it doesn't work, it doesn't work. But the best order block that could work is this one. Why? Or even this one, for in fact, because if you're looking at this, now we're using our trend line analysis. If we're looking at this here, what are we seeing? We are seeing a trend line. We are seeing a trend line. So now, because we know that this is a channel, this is a channel here. Hey, oh, I didn't select it. Okay, now we know that this is a running channel going to the downside, and we know that price has to come to this area and retest before going down. But we also know that this is also an area of structure. So what might happen is that price might go up, retest, and push to the upside. Or price might go up, retest that area, come back down. You understand? So this order block we might not trade at the moment because it will go down, come back to this level before it goes up. You understand? So we would not trade this order block at the moment because we are not sure what is going to happen with the price unless we drop down to lower time frames to see the behavior of the market. But we'll talk about those things, top down analysis, on another topic. So yeah, that's it for order blocks. The point of this lesson was just to show you the basic understanding of order blocks. So yeah guys, let's jump on to the next lesson.